There are so many people out there that want to get involved in buying income producing properties so they can build their wealth. But the problem is they don't know how to get started. I'm now offering my very own buy and hold rental analyzer to help you analyze rental properties able to build wealth over long periods of time. And so what is your motivation for wanting to get into real estate and buy properties? There is so many different ways for you to jump into real estate and to get involved. You can invest in residential properties, commercial properties, land. You can do land. You pick a direction in real estate that not only works well for your business, but you also want it to work well for your All right, so a few other things that you need to think about when it comes to getting into real estate. And for starters, real estate is not free. Real estate costs money. And so the first thing that you need to think about after figuring out your why is, how are you going to pay for these properties? Do you have your own cash? Are you going to use a home equity line of credit or a business line of credit? Or are you going to use private lenders, which we also call OPM, other people's money, which is a great tool to use, because when you're not actually using your own money, you can use other people's money to fund your deals, so that way your money, you can use your cash and your money to invest in other things or to keep as reserves in case you need on a rainy day or in order for you to live off of. And so we've done that for years, where we've used private lenders or OPM to fund deals, and it's just a really great way to do it. Now, there are some things that you need to know about using other people's money and private lending, which is a very big topic that we're going to save for a different video down the road. So you can look forward to that. But just know that you need to figure out how you're going to fund these deals. You got your own cash, lines of credit, local banks, using private lenders. How are you funding these deals? Very important that you figure that out very quickly, because when you start to make offers on properties, they are going to expect you to show me the money. Now, the two big areas that you can get into in real estate, or the two major areas, is residential on this side and commercial properties on this side. Now, so you may be asking, well, what's the big difference between the two? Well, the big difference is residential properties are going to be a lot easier for somebody to get started with. It's, for number one, for obvious reasons, it should be obvious reasons, is most residential properties are going to be a lot less expensive. And so you don't have to come up with as much money in order to jump into residential properties. Now, another great benefit of residential properties is the fact that you're able to buy the properties fairly quickly, usually within, it could be a couple days if it's a cash deal, or it could be 30, 45 days if you're using a loan or something like that. But you can buy the deal quickly, and then on the back side, you can also sell that property quickly as well. So that's two big benefits of having or getting into residential real estate, is the fact that you can buy and sell quick, and it's easy to go ahead and get started with. Now, for commercial properties, some benefits of those are the payout on them is fantastic. In most cases, commercial properties, you're going to have a lot more margin there to make a lot of profit. Now, the problem with it is, though, is that the commercial properties are generally going to be a lot more expensive in order for you to get into, which makes it harder for people that are starting off. And another big setback as well is some commercial properties may take 30, 60, 90 or longer period of time in order to get into the property, and the same on the backside when you go to sell it. And it really just comes down to the fact that with residential homes, people have to have a place to live, and they're either going to buy a place or lease a place. But when it comes to commercial buildings, some commercial buildings could sit vacant for a very long time. And the reason is because sort of owning a business or buying a business is a luxury in most cases, and so people don't have to start a business or do a business. So sometimes these commercial properties will sit vacant for a long time, and you don't want to be a property owner that is holding on to a property that's vacant like that. If you're not renting it out or unable to sell it quickly as well. And so that's a few things for you to think about. Now, let me tell you about a great benefit of commercial properties, and that is whenever you have a commercial tenant in place, you can do what's called a triple net lease. And this is a beautiful thing. And the reason it's a beautiful thing is because a triple net lease means that the tenant is going to be responsible for all the taxes, the insurance, and the maintenance on the property. And so what does that mean for you? That means less overhead, less things that you have to worry about, and less involvement you have to have with the property. It puts a lot of that pressure and responsibility on the tenant's shoulders to take care of. And so that's just a beautiful thing versus the residential properties. Generally, you're going to be just doing a regular lease with somebody, unless it's an owner finance or a lease purchase type situation, which again, that's a whole nother big broad topic that we'll get into at a later time. But in most residential leases, you are still going to be responsible for the insurance, the taxes, and the maintenance on that property for as long as you own it. And so, that's sort of a negative on the residential side, but a positive on the commercial side. And so that's just a little tip to keep in mind as you're trying to decide between residential or commercial, if that's one of the two avenues that you're looking to go in. All right, so this next one is a great point to keep in mind, especially if you're looking to go the avenue of residential type properties. And that is that generally you're going to be looking at low, middle, or high income type properties. Now, when it comes to rental properties, I would try to stay away from the high income area type properties. And the reason being is because I've noticed over the years for myself, and I believe other investors would agree with me as well, when you buy higher income type properties, generally, even though it's a great property, it does not make very much cash flow at all, if any. And then on the other side of the spectrum, you have your low income type properties. Now, these are great properties to buy, easy to get into, and ultimately, since it's a low income type property, you can buy this property and the cash flows are going to be a whole lot higher. So for example, in a low income type area, you might buy a property for $10, $15, or $20,000 that you can lease out for $600, $700, $800 per month. So that's a really great return on such a small investment versus the high income property that we're talking about, where you might pay $300,000, $400,000 for a house, but only lease it for around $1,500, $2,000, maybe $2,500 a month. So you can see how, based on the amount of investment, you're not getting as much return on it. And so I find for me, the sweet spot is really those middle income type properties. And that's just my personal opinion. That's the type of properties I like to buy. And the reason is because I find in that middle income, that middle bracket type property, you're able to have a good asset, a good piece of property that fairly easy to buy, and it's going to be fairly easy to sell on the backside. And your cash flows are going to be pretty moderate. You're not going to have great cash flows, but you're not going to have low cash flows either, like the high income type properties. So you're going to fall somewhere in the middle to where you have a decent amount of cash flow that you're able to create on that particular property, and you have a great asset that is easy to sell. And if I didn't mention before, with the low income properties, even though you're making higher cash flow, it's a lot harder for you to sell that property. So low income property, high cash flow. Middle income property, low cash flow. And so if you can remember that, that's a little trick or tip that I picked up over the years, and that's why now I focus more on the middle income properties. Not saying that the low income properties are not a great way to go, because for some people, that's the only thing they can afford, or that's the easiest thing that they can get into, or that's what they feel most comfortable with. And look, if that's your why, if that's your purpose, if that's your motivation, maybe you want to help people in these low income type areas. That is a great place for you to invest and a great place for you to build your portfolio. On the other side, going back to the high income type properties, high income area type properties, maybe you're not worried about cash flow. Maybe you just want to park your money, your investment, into a great piece of real estate that you know for a fact, the tenants are not going to mess it up. They're going to take care of it. They'll probably stay there for a while. And it's just going to be a property that's going to continue to appreciate over the years, and you'll be able to sell it at some point down the road. So very, very safe route to go, but not going to make a whole lot of cash flow in most cases. Well, I sure hope you enjoyed this video and you find all this information useful to use in your business to continue to grow, or if you're just getting started, to get your feet off the ground and really dive in and get started with real estate. And I hope you took advantage of go ahead and get that buy and hold rental analyzer so you can start using that today as well. And go ahead and leave me some comments. Let me know what you thought about this video. Let me know what your why is. What is your motivation to get into real estate? And if you have any questions about education, what books can I read? Where can I look for different tools or education, things that I can continue to grow my knowledge? Please leave a question in the comment section below, and I try and answer them as soon as I possibly can. And if you haven't already, also hit that subscribe button, hit that notification bell, and that way you can get notified every time we put out a new video. And so thank you for joining me here today, and just continue to get out there and build your empire. Thanks for watching this video, and if you're ready to take your business or personal life to the next level, make sure you hit that subscribe button below and become a part of the Empire Your Life community. And if you look over to the side here, those are the videos that you need to see next. And don't be shy about sharing them with friends and family. Somebody else might be able to use that information in their life today. So continue to get out there and build your empire.